The US Fed has announced a new round of monetary stimulus. The Fed took an unprecedented step of indicating that rates would remain near zero till unemployment falls to at least 6.5%. The Fed said it expects to hold rates steady as long as inflation does not threaten to break above 2.5%. FOMC meeting concluded that strains in global financial markets continue to pose significant downside risks to the economic outlook. The communique reaffirmed that Fed will continue purchasing additional mortgage-backed securities worth about $40 billion per month. Fed Chairman Ben Bernanke warned that there are limits to how much aid the Fed Reserve can provide to the economy, as he urged politicians to tackle a year-end fiscal cliff that could derail the country's gradual recovery.
We expect to continue asset purchases until we see a substantial improvement in the outlook for the labor market in a context of price stability. In assessing the extent of progress, the committee will be evaluating a range of labor market indicators, including the unemployment rate, payroll employment, hours worked, and labor force participation, among others. Because increases in demand and production are normally precursors to improvements in labor market conditions, we'll also be looking carefully at the pace of economic activity more broadly.
What do we have, or how exactly is Asia moving this morning? If I map Asian markets are trading with a positive bias, but again the underlying strength is clearly not there. Hong Kong is strong, Japan is up by about 150 points. There is hope that the Bank of Japan could follow a loose monetary policy that in a sense is helping exporters because the yen has cracked or it has collapsed against the dollar of late. So the big story in Asia is exporters are doing well. China as an economy seems to be making a comeback. Dollar index has cracked for 3 days on the trot now, and gold prices have stabilized. So stability, I think, is the big operative, operating word when it comes to the global environment.